So let's pick up from where we left off, and I'm going to pull up the QM contract, which is the mini crude oil contract, and we're going to take a look at some of the movement we've seen in crude. Crude was one of those markets where I wanted to take advantage of that swing, and you can see where prices rallied into my short area at 74.50 and never really gave me the profit target I was looking at to the downside. I've kind of floated around in no man's land. Had a little bit of help here. We went at 72.67 low. I did take 73 off the table, but again, I had at least 2/3 of my position still going when this happened. So while I was able to take about $1.50 off the table, this definitely hurt. I won't kid you. And that's when the wheels fell off the wagon. So if the validity for my trade basically was not only just the major psychological level at 74.50 level, but also the bottom line of the wave as prices were heading down, I think in what was a better definition of a markdown cycle than what I was actually looking at on the Aussie, you can see that move lower. But the Canada, and this is where the Canada was pretty screwy. Let me go back to that Canada for a moment, because even though the crude oil market headed lower, even though we had that movement on crude for a little while that headed lower, the Canada never really had a response to that. And what I mean by it is this. If you're looking at the chart of the dollar Canada, which is what's in front of you right now, this particular chart shows continued loonie strength. Okay, this is the Canadian dollar gaining over the US dollar despite some weakness in crude at the same time. Once I saw the Canada and the crude oil diverge, then I knew this was not going to end well for me. This was not going to be a pretty picture. Luckily, I was able to take a little bit of crude off the table. All it did really was minimize my losses. But I'll take that. I'll take that when I have a series of trades that, and let me tell you, here's one of the things that is both good and bad. I won't have trades that aren't in harmony. The mindset of my entries are this, because I trade futures and Forex together. The mindset is it's all one trade. It's all one trade. So IAOT, right? It's all one trade. That means that I'm not going to trade, for example, US dollar index strength and expect the euro US dollar to rally at the same time. Okay, I'm not going to play situations like that because I'm essentially hedging myself. I don't want to do that on a regular basis. I'm a speculator. I'm a trader. I'm going to do my analysis, place my bets, and know where I no longer want to hold on to the positions. So where did the Canada tell me that I shouldn't be long anymore? Well, once crude oil began to weaken a little bit and the loonie continued to strengthen, that was my first futures-related clue that things weren't going to go my way. And then finally, when we broke that 480 level, which I told you guys was my stop loss, I had broken the support of the very reason for the swing, which was the support of my wave. And out I go. Which is fine. I'd rather be wrong there than continue to argue with the market as it heads lower. Right? What's the point? Okay, I was wrong up here. I'd much rather be out here, even with that loss, than be arguing at the market as it's nearing 400. Makes no sense. If I think there's going to be a second opportunity to be long the Canadian dollar, heck, it may not even be on the daily chart. It might be on an intraday chart. I've got to keep those ideas in mind. Like I said, my jump here was leaving the 5-minute charts and going into these dailies. Now, by the way, talking about the 5-minute charts, I do want to talk about my 5-minute setups here, and maybe I should just go ahead and do that in part 3. But let me just mention, it's all one trade is definitely the common thread through all my setups. I don't want to have a series of setups that aren't in harmony. I'd rather lose all at once and know the reason for the loss of validity than be in a whole bunch of different trades that rely on different movements out of the dollar. I don't want to be long, thinking long commodities, and for example, ignore what that would mean in the Aussie. I don't want to ignore that. Okay, if I really think that the commodities market is going to strengthen and continue to strengthen, then I want to be long the Aussie. That's pretty much what the play's been here, as the Aussie gains on the dollar and the commodities prices are heading up higher. Here we're definitely in a flux here. So is there going to be some sort of transition? We'll see. Okay. Same thing with the Canada. If I'm looking at playing loonie strength, looking at the market this chart heading down lower, loonie strength over the dollar, I'm looking at what? Looney strength means I should ideally be seeing some crude oil strength. I should be seeing some dollar weakness. So I want to make sure my trades have the supporting cast of characters all pointing in the same direction, because that way I can put on trades in commodities and in Forex with that it's all one trade type mentality. That's a big factor to me, and I don't ignore that. So I'll talk about my 5-minute setups in the very next video.